I got to wrap up something, but I still don't think we're making big moves, but there should be a couple today we should still do.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, it's another beautiful spring day. We're getting some feedback, and we got a mix of listeners. It's kind of interesting to see what some of our feedback is, and we have some listeners that are new to commodity trading and new to markets, and then we have some listeners who are very experienced giving some feedback to us, maybe telling us that they don't necessarily agree, and we obviously appreciate that because we know we're not always right. That being said, I do want to cover in the episodes moving forward and probably closer to the end some real basic market info, and I just want to say that up front in case you're looking for some more basic how to trade commodities. We're going to try and include some of that toward the end of each podcast. So you can skip ahead if you don't want to listen to John or I. But you have thoughts on that. Otherwise, we can jump into some info. I mean, it would be a great day for baseball, and you were mentioning some baseball statistics today, or at least people applying statistics to their feelings about grain.
Yeah, I've noticed the trend on Twitter and Facebook that if you mix up enough numbers, throw in enough dates, such as, like I say, I think I gave an example, the San Diego Padres at home, Seattle Mariners on the road. The Twins haven't lost a game in 18 weeks. Just a complete made-up stat that I made. But if they're doing this in grains now, if you haven't planted by X date and it's 3 inches of rain more than normal, then there's no way the yield could be 181. You're seeing these crazy statistics, this curve fitting, this let's talk about something bullish just to talk about something. It's kind of running rampant online right now, where it's fallen back from the rain being bullish because of planting delays. Now it's bearish, so we got to come up with something new bullish. And of course, now it's going to be dates or too much moisture and the nitrogens. They're always going to figure out a way to spin a story bullish, but I'm really noticing that it's more than ever now. I mean, usually when you would see the planting progress at a point where that's no longer a worry and a lot of rain, it would sell off and it would be bearish. But not everybody agrees on that anymore, of course, because of the statistics that I said. If you curve fit, you dig deep enough, you're going to find what you want to find. You can spin any scenario into bullish grains. I mean, at any time, and that's what they're doing online right now. So I don't think it's doing anybody any favors. Just judging by the tone on the phone, I think guys realize this grain's probably not really bullish. It doesn't feel like last year. But it's that information overload, and I keep talking about it. These guys are listening and seeing more newsletters and seeing more news, and I say that in quotation marks, more than ever. They're more educated, or should be on paper anyways, but it's just not happening the way that it should happen. Like I say, you just keep on digging, and that's one thing you don't want to do in commodities is keep reading information until you find what you want to hear. You see that in U.S. politics. You see that in a lot of different stuff nowadays where you just join groups that tell you what you want to hear. You listen to radio stations that tell you what you want to hear. Then you surf the internet and it tells you what you want to hear. And then you get really blind to what's actually going on out there. So let's get back to maybe we should probably look at the USDA's numbers, the USDA's projections, as much as that angers people sometimes. It's just what you have to use if you're going to be somewhat successful in this business. You can't ignore the numbers that are in front of you. So we're at that time of year where we've switched from that bullish rain, too much rain, delayed plantings, to we're not worried about that anymore, and oh wait, this rain makes grain. It definitely, I could feel it on the phones, but I'm still not feeling the fear that this could fall. It still goes to its inflation. or it can't fall because it's below my cost of production. So there's this old bull market stubbornness left over. But I got to think that the corn bulls that are still storing corn to see what the weather is going to be going into July have to be getting nervous by now. And I have been getting some calls on basis. Should I move this? Should I lock this in? You can feel the nervousness. If you held it this long and you were waiting for the weather, this is not exactly the weather pattern that you're looking for. You're probably maybe wanting to mark it on hot and dry. That's tough to believe that could happen in the next 2 weeks. So I think over the next 2 weeks is going to be a little bit rougher. But yeah, a lot of baseball statistics, same mentality that they use there, where like nearly a record's broken every day. When you have enough categories and enough things going on in any given day, you can break a record in anything you're doing, really. The most stub toes while you had a headache in one day. You can make it's endless. But that's being applied to grain, so be real careful about that. I'm gonna say that the USDA's numbers are high. There's a lot of rain, and there's a lot of ground moisture, and the short-term stuff, without a doubt, is negative. Now we have a long weekend. We have the end of the month, or we had a long weekend. We have a weekend coming up at the end of the month. So it's probably going to be back and forth today. We got a little bounce going that's already failing. But we'll see how the day progresses. I would guess that they're probably going to cover some shorts into the weekend. I mean, it makes sense. It could be a rainier forecast, and maybe that last 15% is going to be really hard to get in. But nonetheless, it's what it is online now. I just wish it wasn't affecting guys' perception of the market as much as it was. This is the kind of stuff that's always been out there, but it just hadn't been read. And it's very noticeable that guys are reading this stuff because it's brought up to me quite a bit.
I think it's natural, and you, especially as a producer, you want to be bullish, and especially as you're planting, you don't want to be bearish the crops you're putting in.
Yep.
But that's the point of hedging, right?
Yeah.
I mean, to lock in a price, or at least part of your price of what's coming forward, or understand there is downside risk.
Yep.
Too.
Yeah, and I would look at the seasonals and not ignore them, and I would look at the fundamentals. Not that they have to matter every day; they certainly don't. And then look at the outlook and the projections, and also look at the fund position. And between those three things, that'll get you on the right track. Of course, it won't tell you everything, but still, try to filter out the influence this time of year. This is known for this. Last year was a perfect example. Hot and dry, everything's gone. We don't have anything. I'll be lucky to get 50 for my, corn. And then in the end, we broke a record. But then, even though the record was broken, then you're going to hear guys come out of the woodwork. Hey, if they want to, if it wasn't the acreage being way down in corn, there's no way they would have got that number. And they massaged the numbers to make it look like something it wasn't. That just doesn't help. That doesn't help when you fight the system on a daily basis. It's one thing to have kind of you look at the markets and you think maybe those aren't the right numbers by the USDA, and kind of keep that in the back of your mind. It's another thing to just flat deny it's happening and go with your own numbers. That's usually not a good idea. It might have worked out in 2019 and 2020 if you could hang on long enough. I do remember that time period where the majority of the people said this is wrong. But unfortunately, it was such a long time period before that actually surfaced that most guys had given up on that. And we saw some of the worst USDA's numbers on paper at the end of a summer that we've ever seen that really spooked guys into selling. And then, of course, the rest is history and went way higher. And there's been this very, very strong bitterness ever since that. I do wish that 2019 and 20 and 21 would have never happened.
I think it's... You're kind of bringing up the point of you have to read the markets too, right? I mean, yeah, you can only trade what's in front of you and what the price is on the boards. Yep. And what they're willing to give. And so you can disagree all you want, right?
Yeah.
And correct, the numbers may be wrong, and those are trading opportunities.
Yeah.
If they're there. But you also need to be realistic. That's what you're saying. You can't just go cherry pick, but the numbers could very well be wrong.
And I did do two things there. I said the USDA's numbers are right, and then 5 minutes later I said they're completely wrong. Don't believe them. I had two different versions. So how do you filter what's right and what's wrong? I got a very easy answer for this. Actually, I learned this from 2019-20. Is if you don't trust the numbers, and that's perfectly fine, and you don't believe it's out there, watch that demand side of stuff. Are we exporting it? Is that extra demand? Domestic demand is always strong, or it normally is very strong. That's not the argument here. It's that export, the extra demand that cleans out those commercial channels. If you don't believe the numbers, watch that, because that would have helped you in 2019. We were selling beans and corn on a daily basis. Every morning it was flash sales, and the USDA said the numbers are horrible. That would be my only filter that I would use, if I'm going to override the USDA's data. If you see that strong demand up front nonstop, you can sustain very, very strong rallies, like very strong rallies. So in order to bypass what you don't believe is right, use that as your gauge. So if the demand isn't good and the USDA's numbers aren't good, I wouldn't swim against the current there. But if the USDA's numbers are terrible, and we're seeing outstanding demand, especially at low prices, maybe be a little more cautious that this could go a lot higher optimistic. So after 2019-20, that's how I fixed my USDA's numbers. If I distrust what they're saying, look at that demand. If we can clean out those channels and it's actually not there, you're going to get significant rallies, which we did see that year.
Yeah, and those are opportunities that we look for, and that's the point of working with a broker who's watching the market every day, right?
And we keep on saying, look for good information, or look for better, and there's a lot of bad stuff out there. You're going to have to contact people that know what they're doing, that have seen these looks in these markets and all this news. And basically our job is to read all the news and see all the news, talk to a lot of people, and basically filter that into actual usable information. And that's where we're going to help you, really trim off the excess fat of that information, that your information overload that you guys are reading out there right now, or hearing on your phones, or different podcasts, and everybody's got a different opinion. You want to use a filter of some sort for all that, and we're great filters for that.
Excellent. That kind of leads me into one of my thoughts today, and more on the basic side of trading, but actually talking about how commodity markets work from the very, very basic. And I just want to talk, this was a question that came in by email, which you can always email us at hedgeheadspod@gmail.com, hedgeheadspod@gmail.com. But I just had a question about the actually trading, and on the buy and sell side, and the fact that you can sell at any point in commodities. You can buy at any point. What are those numbers? Where do you choose to do it? And specifically what I think of, and I just the simple answer is, if you're selling, you want to sell as high as you possibly can, right? You don't want to sell low, right? Same thing buying. You want to buy as cheap as you can, just like you're going to buy a car. You want to get the best deal you can, right? You're selling your used car. You want to get the most you can for it. It's no different, right?
Yeah, I mean, that's guys want to mark at the top, buy at the bottom. I mean, that's the goal of everything. But realistically, you're looking for a nice chunk in the middle, or a nice average on your hedges, and that should be your goal, because lows and highs are got sometimes, but they're fairly rare. You're more likely to get stopped out on the high when you're shorting something than you are to short the high and let it in, and it goes down. But it feels good when you get that, there's no doubt, but it's just not as realistic. I think guys tend to focus a lot, especially this time of year, on trying to get that high. You'll see these markets go up on adverse weather. Like last year, I think it was $6.40, and then it falls to $6, and they pass on it because it was just $6.40. And you got to realize that's still, I mean, what was it, 50 cents at $6? It was still 50 cents higher than it was a week earlier. So guys get focused on getting that, and I feel like in the summer that if they miss that, they really want that price back, and that's how stuff doesn't get marketed. Once you see that high water mark, you want it. You just think, whoa, I could buy this and that and this. But it's not realistic. So you want to focus on just joining the trend and seasonal times a year that makes sense. And we're headed into a very important seasonal, one of the most important of the year, going into June. Call us if you want to know more about that for beans and corn. But if you make one change on your marketing on your farm, this is the time of year that you need to look at that. So we'd give you more details if you want to hear more about that seasonal. It's just not something we're going to do on the podcast because it's too close to a recommendation as far as compliance goes. So we'll have to talk to you privately. But we are coming up to one of the most important windows for that, where highs or lows can come in. This year it's at an interesting price, a little bit below the cost of production on average for a lot of people. And there's a lot of stubbornness out there. I'm not finding a lot of fear that it's going to go down. I need to do something. And I'm also not finding a lot of, I think it's going way higher. How do we get involved? So it's kind of an interesting year where I would say there's a lot of, people just kind of ignoring the market right now.
And I think, well, let's dive in a little bit too on the buying and selling side a little bit more, even more basic than what you mentioned. I mean, I think that's great as far as producers, but just from a trading side, if I want to sell something, I can only sell what people are willing to buy it for, right? And likewise, if I'm buying something, because there is someone on the other side of that trade.
Yeah. Commodities are unique with that you can sell or buy and you don't have to own it. Where like even in the stock market, if you were going to short 100 shares of stock, you have to borrow those shares, or your clearing firm, or I should say your brokerage, maybe have those shares on hand that they can borrow. But it still needs to be borrowed to short those 100 shares. That's not the case here. You can short 5,000 bushels of corn or gold, or 100 ounces of gold, 5,000 ounces of silver by pressing a button. You do not have to own it to sell it at all in commodities. So that's unique that way. So when you get comfortable in commodities, you're going to be on both sides equally as easy as you would. Like, guys just by nature because of the stock market, or just in general, you're on the buy side, that people want to be optimistic, like you were saying. But in commodities, most of the money is made fast. The fast money is made on the short side. What goes up in commodities takes a lot of news and a lot of information, or I shouldn't say information, a lot of fundamentals, and you need a good story to keep it going. Bulls always need to be fed. But then you don't need any news to make it fall. And that's why commodities tend to fall really fast when they fall. If there's not a bullish story, it just tends to trend down. That's the path of least resistance. So that's what's nice and unique about commodities. A buy or sell does not matter. It might be complicated in your mind that how can you sell something you don't even buy, but your goal is simple. You're trying to sell something and then buy it back at a lower price. Just as if you were to buy it, you're trying to buy it and sell it at a higher price. Just think of it as the opposite of your buying. And then once you start thinking of it that way, it'll just be second nature to you. Very common. If I get 10 phone calls in a row, I would say I'll get more phone calls here on the short side than I would on the long side on any given day. I don't know if it's just because of my nature and the way I am, or that's just, the way guys feel about commodities. But I get more shorts than I get longs. And I don't know that that's the way it is for everybody, but definitely here, that's the way it is.
I would say to a certain extent, we do a lot of hedging, so that's going to tend to be
to the short side. Yep.
But I would say that there's definitely times that I lean towards the short side myself too, and maybe that's why people trade commodities, is they might lean towards that too in the interest side if you're doing it from a speculative.
Yeah, and it's nice, like I say, every time the stock market falls sharply, and my mother, I'll talk to her and she'll say, "Oh, how's business? She's very worried. She's just assuming that if things go down, it's going terrible here." And I've explained to her a number of times that no, that's actually usually easier, when the markets are falling than up. But it doesn't seem to sink in, and that's fine. So the next downturn in the stock market, I'm sure I'll get another concerned phone call. But that's what's nice about commodities, is that you can be on either side. And there is no excuse for a producer at profitable prices not to at least have some locked in. And that's what makes it nice. You can short it at any time you want, lock that price in, and then the prices fall, and everybody, who could have saw that coming, or how could you have prevented this? There's actually a way you can prevent that, and that's hedging.
True. And I will say, we talked about this a few episodes back. It's one thing to be right. It's another thing to actually get the money out of the market. So
yeah, that without a doubt, that's one of my biggest weakness. I recommend trades to clients, or I'm in trades myself, and I'll have clients make much more money on ideas that I have than I do on my own account. And everybody has their weaknesses, and mine's definitely profits, without a doubt. It's one of the hardest parts of trading is knowing when to get out, and that's when you have more than one contract, it makes it a little easier. You can scale in and scale out, But when you have one contract going, it's just that that feeling of finality. If I get out, then I'll miss out on all the profits. Then you stay in and you go back right to where you started from. You do the right thing this time, and you grab your quick $800 on your option, and you grab it, and then you watch it go up for the next month every day, and you're like, yep, of course, I got out and did the right thing. So it's a struggle, without a doubt. Knowing where to get out, especially at shorts, can be very difficult.
Yeah, you reminded me of an option that we talked about quite a while ago, but I had one. It was $800. I was up. I was super excited. Had taken my profits, and it immediately went triple where it was at. And I remember telling you about it. And he said, so if you would have bought instead of sold, you could have not tripled the one and tripled the second one. So
yeah, you can count on that. I mean, if you get out, not only did it triple in value, it probably did it really smoothly without any pullbacks where you wouldn't have got out anyway. It likes to taunt you when you get out of stuff, and that's just, as soon as you accept that that's going to happen 90% of the time, you'll feel better.
Yeah. I think it's pretty much a rule. If you choose to get out, it is going to run your direction for a few days. And if you don't get out, it's going to immediately reverse. And
yeah, it does.
You'll be lucky to get out at break even. It'll probably go negative against you.
It does feel very personal, and it probably is. They probably know what I'm doing, and they're probably taking the other side.
Right.
So it isn't. They don't know what you're doing or why you're doing it. They do sniff out stops, and they do see those stationary orders. So it's not all completely untrue, but in general, they're not going to be caring about 1, 2, 3 lot, 4 lot guys, or even 10 lot guys probably don't make radar screens. There's some money moving around. Unfortunately, it seems like they know what you're doing, but most likely they don't.
I would say most likely it's psychology. If you got out there, so did everyone else, and that does turn, keep it running.
Confirmation bias. I mean, it's like the casino. You feel like the slot machine's picking on you, and you get you need 6 to get the bonus, and you only get 5, and you see 5 a lot. But often, with the bonus symbols, you're probably getting 3s and 2s and 4s just as often as you're getting 5s. It just, in your mind, it was so close. It feels like that it's always 5s. So it's definitely happens in commodities, confirmation bias. You do forget about getting out of those options on the high tick or near the high tick. Because there's nothing to fret about there. That's no fun. So it always seems like that. But if you looked at your averages, you probably would find that more often than not that you did probably a pretty good job just in your mind. You always remember the ones that you could have got, or the one that got away in the fishing boat. Those are the ones that stick with you, not the ones you did the right thing on.
Right. I mean, that's true in life.
It is.
It's easy to remember the bad and hard to remember the great ones. Or you only remember the really great ones and not the average.
I try to forget immediately afterwards, and I think that's some great advice because guys tend to dwell on what they could have done, what they should have done, and it doesn't help you at all. I mean, it's over. I have a number of guys that it really bothers them. When they make a wrong decision, they should have stayed, and I have other guys that will forget about it in 20 seconds, which I'm one of those, because you have to. You just cannot dwell on that stuff. What's done is done, and then there's another train coming down the tracks.
Yeah, I mean, I don't want to turn this into a whole psychology episode, but you again reminded me, of something else, in that one thing I do a lot is you have a good win and you immediately go in and overtrade. You take those gains and you want to start putting it into something else. Oh, we can double this up. We can triple this up.
Yeah.
Right? I mean, that's kind of the casino mentality, and you see it in a lot of people.
Yeah, it's just the greed, and that it goes with the lows and highs, and you want it all, and you don't make that your focus. If you're clicking on your account to see how much money it is every tick of every day, that's gonna be hard on you. I would say ignore it, but I meant if your focus is solely on that you're gonna have a hard time. Markets fluctuate a lot, and you just got to try to have that balance is what you're looking for.
Makes sense. Well, you want to leave your number here? We mentioned multiple times to call to get some info or have direct contact with us. Leave your number and mention how to get a hold of you.
Yeah, we're already getting some feedback on it. So I didn't get to it today, but we're going to start doing specific examples, in options a lot. A lot of it's going to be options. Sometimes it'll be futures. So that's one thing that we're going to be doing, which we didn't do today, and normally it'll be a normal part of it. Also, like you said, we're going to do some more advanced stuff or just regular stuff, and then towards then maybe some really basic stuff. So we'll try to make it easy to find what you want to find and not mix it up too much. So it'll be regular stuff, more advanced, or just regular talk at the beginning, and then towards the end, or middle end, it'll be that very basics. Like next time, I think we're probably going to go over how to even open an account at a commodity brokerage and what does that entail. Are there fees? And we'll just answer your questions on that, and that'll probably be the next one. So just keep on putting in ideas on what you want to hear, and it'll evolve into that.
I like it. Do you want to reward our listeners who made it all the way to the end? What do you have a hot trade? You want to share an idea?
Oh, I have many hot trades. No, it's going glide into the weekend and relax. It's the end of the month. Who knows what these guys are going to do, and we also don't know what the weather is. So my advice is drink some coffee and relax.
Sounds good. It's the weekend, so I'm going to have a beer, but I guess it's the morning, so I better have a coffee.
Yeah, one of those might get my way this weekend, too. I don't know, though. Maybe not.
Sounds good. You did not leave your number. Let's finish with that and close it out and have a great weekend.
218-731-1578.
Thanks, John.
Bye. Rain is bullish, and this is the week that it turned bearish. It's that weird time of year where it goes from bullish to bearish.